This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz, and today is 8/6/21, show number 307. Wow, did we ever get a major job report on the upside here, Nick?
Yeah, we have a pretty good number out here today. Lately, all of these job reports have been missing, including the latest one, which was Wednesday by the ADP. That missed in a big way, but today, what can you say? Non-farm payrolls rising by 943,000, so they tell us, in the month of July. We were expecting, I believe, 850,000, so this is a big beat. And the first beat we've had for the so-called Biden administration. So all in all, the market. So what can you say? Markets seem to be rejoicing over the number today. You do have the Dow a little bit higher by 136 points. What is getting hit, though, Kerry, is the Nasdaq. The Nasdaq is not acting very well today. That's down about 0.7%, 100-point drop on the Nasdaq Composite today, because bond yields have caught a bit off of this news. So that's going to be very, very important to going forward, and we'll see how it plays out. But very, very good job report today.
What's the Russell 2000 looking like?
Yeah, so today the Russell is up a little bit. It's catching a little bit of a bid. It's up about $4, a gain of around 0.2%. So it's really just technology that is taking a little bit of a hit today. The Nasdaq a little on the weaker side. And again, it's bond yields. The tech stocks do not like when bond yields get a pop. And today you have the 10-year U.S. Treasury Note yield up about 7.5 basis points as we speak to 1.295%.
And actually, that's actually better news, because when you see that bond yield slumping, you know that bad news is ahead.
Yeah, the funny thing is 6 months ago, it was just the opposite, right? So these correlations change all the time. But, today you have bond yields catching a big bid that puts the Fed back in play. Maybe they'll start to talk about tapering. They have their big Jackson Hole powwow coming up at the end of the month, right before Labor Day. Will they start talking about tapering? At this stage, honestly, nobody believes they're ever going to taper. So, because they'll use the Delta variant as an excuse, the Lambda variant as an excuse, maybe
the Marilyn
Beta
Monroe
variant.
Don't forget the Marilyn Monroe variant. That one's a big one. The Kennedys are really worried about the Marilyn Monroe variant too.
And this is where we are. So they're using all of these different excuses to not taper. And the market says, all right, at this stage of the game, maybe they'll talk it up a little bit that there's a taper down the road, but nobody expects anything to happen.
Hey, so one of my guests, Bob Hoy, elderly gentleman, but an amazing mental clarity, great guy from Vancouver, really close friend. My last interview, he said, look, in the fall, there's going to be a financial crisis. And you kind of go along with that thesis, don't you?
I do, because I think that the financials have already put a little bit of a top in already in July and in June. Basically, some of the European stocks have already topped out in a big way. Take a look at, say, like Deutsche Bank. This topped out in May. I mean, nobody talks about it. It's kind of under the radar right now. It's been rebounding a little bit, but it traded up to around 1534 in the month of May. Now it's doing what we call a zigzag up, probably goes to around 1350. And then I think this thing can really get hammered to the downside. So I think there is something brewing, and I have not been able to put my finger on it. I've told my membership, I've said, there's something going on in the financial market. I can't really explain it or put my finger on it, but this is the pattern that it's making is problematic. And I'm a pattern trader. That's really what I am. I go off of charts. I can't tell you the story. I can't explain the fundamental picture to anybody, and I don't even try to. But I can explain the photograph that I see on the chart, and I do that pretty well. Never perfect, but that's kind of what it's telling me. We got one more thrust up. You call it a zigzag up or an ABC move up, and then the financials come under some pressure.
Hey, so gold, silver really getting slammed like mercilessly today.
Yeah, gold is getting pounded today. You have gold futures down about $43, trading right now at around 1,766 an ounce on the futures. Silver also getting hammered today as well. That is trading down 93 cents to 24.36. That's about a 3.7% decline. But I'm not shocked at all that the future that the metals are down. I've been saying on here that the miners are not leading. That's problematic. You got to be careful. I don't know if I could put any more warning flags up for us.
All right, and going back to Bob Hoy again, this is exactly what he said. But he said after this crisis hits, people will be running into gold, and gold will be going higher. He's saying deflation, and look at oil. We didn't really have that on our agenda today, but because of the we don't want to say a certain medical condition out there in China that's sweeping the country, gasoline consumption there is way down. Oil prices starting to slump.
Oil prices are starting to slump. Now, let's just say what has gone on. Oil put a little bit of a top in on the 6th of July. It had a pretty good fall. I was actually short oil, made some good money on that, and covered it on the 19th. Then oil caught a big bid, back up to $75. And now it's trading back down around $68.50 today. Crude oil, as we speak, live time, is trading right around $68.25. So, we are still above that pivot low that was made on the 20th of July. If that low gets taken out, crude oil could move back down to $50 rather quickly.
So, but you think really we could see $50 crude, huh?
I do think that's possible. Sure, why not? I mean, whoever thought we were going to see a negative $40 print back in April of 2020, right? Nobody thought that. And now we went all the way back up as high as $77 on the 6th of July. A move back to 50 is not even that big of a deal. It's not. It's just a natural retrace.
All right. So Bitcoin seems to be holding up well amidst all the turmoil.
Yeah, so when you look at this Bitcoin, you could see that it's been somewhat range bound. Today, it's basically flat, trading at around 40,900. We've been talking about it, saying this is kind of the high range for Bitcoin. I tell everybody, again, you're into that range. You're up there. There's a lot of resistance here. So, but the pattern is good. I will say this much: for the daily chart, the pattern is good. But I don't like the weekly chart pattern. I don't think that is a pattern of strength. So I'd be a little bit concerned, a little bit careful. If you own Bitcoin right now, you may want to protect your play if you have it.
Yeah, well, anyone listening to this understands markets, knows how to trade, they'll do it. But the hodlers out there, they love to ride things up and ride them down. Speaking of which, we'd be remiss if we didn't talk about good old Robinhood.
Yeah, Robinhood's been on what we call a wild ride this week. It now has become a so-called meme stock. The stock went all the way to $85 a share 2 days ago. It's now sitting at $55.79. These guys have already basically sold some stock to raise capital. I really have a hard time with the Robinhood equity. I just think it's like trading the Wild West. Now, granted, it's only about 7 days old right now. So it's only been publicly traded for 7 days, but it's really been all over the map. I would be very, very careful. If you're a novice at this business, I would just avoid that name altogether. Don't even try to attempt to trade this thing. It's a very, very tough equity to trade. If you're a day trader and you're savvy, you could probably work off the 10, 15-minute charts, but I mean, we don't have any time on the clock to really chart this thing, and it's been in uncharted waters as well with the big spike after the Reddit board presses that have been coming out. So I just leave it alone at this stage of the game. It's like the Wild West, but we'll see where it goes, and we'll be able to chart this a little bit better down the road.
Hey, well, there was a huge short position in it, and those shorts got blown out. Now it's settled down. They'll probably short it again, and we'll probably be seeing these Reddit short squeezes happening probably throughout the next month.
Well, there's always that chance. What I would say, though, is that if you look at this equity, it traded down as low as $33 the day it came out. It opened at 38. It went up to 85, and now it's sitting at 56. So it's basically retraced half of its entire move from the low to the high. And like I said, 50% retraces are very, very common. So, you just start watching for pattern, but this is still the Wild West out here when you look at trading this thing, because you just don't have a lot of time on the clock. And again, we'll see if these Reddit boards or whoever gets involved, believe it or not, I don't believe the Reddit boards really caused the move. I think is institutions look at those Reddit boards and say, hey, we got an opportunity here, let's do it. And they push these things around.
Yeah, they try to front run Reddit, right?
Yeah, or maybe they don't even front run it, but maybe they just jump on. But when they jump on with size, that can really, really move it. This is a stock that's got a lot of shares outstanding. It's not like something that doesn't trade a lot. This thing trades monster volume, so it does take major capital to push something like this. Just today alone, it's only 11:15 a.m. and this is trading 40 million shares already.
Yeah, and the fact that I'm just laughing. The fact that all those insiders are dumping their shares now should be a cautionary note to anybody looking to get into it. I
mean, I would say it should be an extreme cautionary note. It's just this is a stock that doesn't have any time on the clock. You're just buying on pure emotion, I guess. I don't know. You're not buying on a pattern. You're not buying on anything substantial here. You're just buying on hope or, fear, greed, hope, and ignorance. I mean, those four emotions, Jesse Livermore's four favorite, that's probably moving the stock all around.
No doubt. Hey, well, you want to avoid these pitfalls, go over to inthemoneystocks.com. Check out Nick's trading record and his work. I think you'll be impressed. Also, take a look at the Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz, and send your emails to kl@kerrylutz.com. Nick, we'll catch up with you on Monday.
Sounds good, Kerry.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago01.